Askal Sa Merkado. Welcome back to our video, and this time around, we're gonna discuss, or not really discuss. I'm gonna show you the things you need to do to become a bad trader. Because human beings, as we are, we have tendency or great tendency of doing things that we're not allowed to do. In layman's term, macharap ang bawal, or sa Bisaya pa, lami na ginadili. Siya yung tawag sa mga. So I'm going to list awesome habits that most people tend to do in trading financial market. I'm saying financial market since it applies to all, whether you're trading in stocks, trading in forex, bonds, commodities, etc. So without further ado, here are the awesome no BS habits you should do to be a bad trader. Number one, emo trading. Alright, for emo trading, these are people who are engaged, or people who are engaged in this trade, especially the newcomers. They trade with their emotions 100% of the time. Don't worry dear, you're not alone. It's a very common habit that would stick throughout your trading life if left untreated. So it's like cancer that grows in your system and ultimately destroys you, in this case your portfolio. Alright, emotional traders are also those who hear loud market noises from news, gossips, and recos from gurus, mga recommendations that disrupts their ability or capability to think for their own and cloud their trading decisions with doubt. So you don't have self-confidence anymore because someone says you need to sell, you need to buy, and whatnot. Other characteristic of an emo trader is his or her glorious impatient ability. Yes, stocks could be a luxurious way to grow your money, but there's no magic formula to grow your seeds with a wave of a wand. It takes time and right strategy. So be impatient so you would be successfully bad trader. Right. Next characteristic will be the Lord of Anxiety. Yung tipong di makatulog sa gabi sa kaiisip sa diwa ko ikaw ay panaginip. that kind of anxiety. You've always you always think about what's going to happen. When you first invest in stocks, your portfolio would most likely be negative. You see it red like blood draining out from your wallet, and if your wallet has been as if your wallet has been stabbed and robbed by the stock market, then you panic since you don't know how stock works. Then you sell your position because you've heard from someone to cut your losses. You do this often, and voila, you've successfully burned your funds, and now you're now a certified bad trader. So you dwell on it, and you won't move on. Then quit the stock market. So that what the best thing you could do is just relax, keep calm, and trade on. Learn the trade. If you're on this stage, you need to move on, relax, know the ins and outs of the stock market. Alright, next we call this major general over diversified trader. Well, don't get me wrong, there's diversification of portfolio is hands down, no questions asked, best strategy to position your nest egg. This protects you from great losses compared to concentrated portfolio by investing all funds in one pure stock. When I say investing, I'm referring to long-term investors who would want to do peso cost averaging method or buy below price strategy. You're going back for the sake of this topic. let us say you have 25,000 in your account. Then you spread it into 5 companies to diversify your portfolio. So you invest 5,000 per company. Now uh, you wait for a month or two. You gain 3%, 1%, -4%, 0.5%, -1% respectively. So your portfolio comes out at -0.5% with all 5 companies. So what you would do then is that you would need to save another 25,000 pesos to lower your average price if you don't have the funds access anytime soon and you diversified your funds in many companies. You would have hard time recovering your losses. Alright, so the key here actually is you start small and focus on 2 companies with different sector. So let me just yeah, since you're beginning to invest, you don't need to spread all your funds throughout broad arrays of companies and sectors, because you will not be able to cope up with the demands once it turns against you. Let me quote my lolo. Okay, let me quote my lolo saying, studying 1 or 2 industries in great depth, learning their ins and outs, and using that knowledge to profit on those industries is more lucrative than spreading a portfolio across a broad array of sectors so that gains from certain sectors offset losses from others. Una kong lolo si Warren Buffett. So that's directly from Warren Buffett. Uh, so you focus on 2 companies uh, in order for you to stabilize your gains, your funds. You grow them slowly. So once you grow your portfolio from capital gains, dividends, regular investment savings, then you could start adding companies in your portfolio. So that's a step-by-step process. Instead of going all out all of a sudden when your first time trading um, the stock market, you do baby steps, right? So if you want to be a bad trader, go ahead. You could invest all the index funds, although we do have ETF now. But let's just say we don't have ETF more than 2 years ago or 3 years ago. You invest on 6, 7 companies. You won't be able to recover those losses or offset the other, especially average Filipino household. Uh, we don't have that pool of funds to invest in stock market. That's why there are less than 1% of Filipinos trade in stock because of money issues, lack of money to invest. So we do baby step. If you really want to be a better investor or trader in stock market. All right, this next guy we're gonna talk about, we're all familiar with this one. This guy goes like this. Pare, bullish market ngayon, pare. Mamaya na ako exit. Tapos, 100% ako sure dito. Tataas pa to. Woo! Go, 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 go. Taas pa. Company. Black, black, black. Tataas pa to. Next day, ay pusang iring. Back to average price yung portfolio ko. Or, anak ng upa. Ba't nag-break down yung market? Naubos lahat ng profit ko. Well, if you want to be successfully bad at trading, be this guy. We call this guy the Greed Ranger. He's so greedy. He's so greedy that he knows how to lose profit overnight. He doesn't have target price. He doesn't know when to take profit. And he enjoys looking at stock price go up well, just looking it go up and not getting profit, that is. So what you need to do though, what you need to do if you're on this stage, if you're still on this uh, level of trading or investing, set your target price, apply your learned strategies, and apply it religiously. It could not only save you, it could only save you lots of money, and you would be able to, accumulate profit consistently over time, over time in your trading uh, career. So whatever target price you have, as long as you're profiting from it, then go ahead, take it regardless. Okay, so that's all for now. Hopefully you've enjoyed some of these uh, characteristics or types of traders, investors that you might have encountered. Uh, all of these we've been in that part uh, before. For newbies, you might be starting to be this kind of mantra for uh, stock markets or whatever financial market you're trading in. So it's pretty much normal. You just have to adapt and learn from these experience. So again, hopefully you like the video. Don't forget to hit the like button, subscribe to our channel for more videos, and I'll see you next time.